My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people want to make friends, just trying to make some money. My job is not just to entertain, but to educate and teach you. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. After a not-so-hot day where the Dow lost 118 points, S&P dropped 0.24%, Nasdaq, more muted, declined 0.14%. We need to talk about how stocks bottom, how they stop dripping down, dripping, so they can start going up again. We have to talk about it now because people are getting fed up with this market, with its endless head fakes and killer rotations. Sell. Oh, we aren't at the bottom. Still, too many believers that each day will be the big day out of the morass.
That was easy.
Truth is, there's more than one way to create a bottom here. I mean, sometimes the selling simply exhausts itself. Sometimes we get hit with a supposedly cataclysmic event, but the reality turns out to be not that bad. Think about actually what happened to the pandemic. Then there's the third kind of bottom. It's the one I want to talk about tonight. It's the kind I'm expecting in the not-too-distant future. I'm talking about the confounding ennui bottom. See, the market's full of nervousness right now because there's so much chatter about hard-to-grasp worries. The supply chain, as if we really know what that means. Higher prices that haven't really hurt us yet. COVID-induced absenteeism at work, how much, how little, and our general inability to beat the pandemic. All day you hear about supply chain disruption. Jamie Dimon, the CEO of JPMorgan, just said it might be over next year. But we don't even know what it is. Why haven't I received my new shower door that I bought in February? Where's the darn furniture we ordered? How come the faucets aren't here? If I could get a straight answer from anyone, it would always sound exactly the same. Well, the ports are jammed up. We can't find enough truckers, and there's an overwhelming number of orders to fill. All right already. We all know it. But you know what? That's actually not the real reason. Most executives make plans out a year ahead of time. So many companies came in with their 2021 game plan near the height of the pandemic last fall. They were completely caught with their pants down when the economy reopened. Meanwhile, anyone who tried to pivot and flood the zone with more supply to take advantage of it has gotten crushed. Hey, listen, Southwest Air sought to take advantage of a sudden upturn in travel, but they got hit with tons of unintended consequences because the capacity is not where it can take advantage of the increases. I spoke with Gary Kelly this morning about Southwest, and it just seemed like a lot of things went wrong when they tried to take advantage of the higher prices. Now, there are some truly ridiculous parts of the economy that are laying us to waste. Let's talk about this trucker shortage for a second, please. You know you can fix the trucker shortage. You got to pay truckers more money. Businesses hate doing this. Cuts into their earnings per share. But I speak from personal experience. At our restaurants, we're paying more for everything. Workers, food, insurance, you name it. The alternative, though, not being in business. You can always close. Not a great alternative. In other words, a big part of the supply chain crisis is really, executives don't want to pay more for labor crisis. Now, that's not a way out of the crisis. If you can spend more in guaranteed delivery, well, that's the win. But you know who's thought of that? Only Amazon. There's plenty more mystification going on. We're now hearing about a new wave of businesses that have tried and failed to get people back to the office, right? They won't go. These work-from-home diehards are driving tremendous demand for housing and autos. But houses and cars are sold out all over the place because of this. The auto companies can't boost production because there's a semiconductor shortage. Remember, they didn't order a lot of semis last year. They didn't think they'd sell a lot of cars this year. Cars these days are very high-tech, not versus data centers, but versus what they used to be when they were mechanical. The housing developers want to hold back on new construction until the cost of materials comes down. Who can blame them? They don't want to be the reason for their own inflation surge. In the meantime, the price of things at the supermarket just jumped. Lots of people think that those prices never come down. But that's only true if you buy nationally branded stuff rather than cheap knockoff private label brands like my favorite, which is Kirkland, the house brand at Costco. I had a gorgeous Kirkland shirt on this weekend. People thought I got it. They thought it was a Zegna. It was a Kirkland. Kirkland's as good as the real thing. That's one reason why we own Costco for the Travel Trust, which you can follow along by joining the CNBC Investing Club. It's that little thing. It's hard to look when you're on TV. Like, remember, I was in high school and they had that stage left, stage right. I never understood any of that. It's probably why I never got the lead. That and because Mrs. Duesberg didn't like me. That's far afield. All right, put it all together, and we've got a bunch of semi-ethereal boogeymen that we just can't rein them in. And actually, I tell you, they're beyond our ken. We can't even figure them out because we are not supply chain maestros. Now, these are new kinds of negatives that we don't have much experience with, which is why so many money managers are unsure of what to buy or sell here. Hence the endless choppiness in the stock market that makes people want to give up. I think this flop-chop scenario has to play out for a couple more weeks before people have just had it and say, I want nothing to do with the stock market. What do I mean by flop-chop? I'll give you some examples. Today, we had some gigantic runs for no reason whatsoever in the cloud software stocks. Salesforce, Adobe, Workday, and ServiceNow. These are some of my favorite companies, but today's action is incredibly frustrating because for the last 10 days, we've been told that these high-growth names are precisely what does the worst in this environment. The worst! These are supposed to be sold and shorted. The experts almost universally told us not to touch these. They were unbelievably good. But today, they defied conventional wisdom. Does that mean maybe inflation scare is merely a scare? Does it mean something's good about to happen? Does it simply reflect the market's total confusion? Just a tale told by an idiot full of sound and fury signifying nothing? I'm going with Macbeth. Honestly, we don't know. But the flop-chop nature of this market makes you feel like there's no way to win because you can't nail down the trajectory of anything. I've been there, people. I've had so many markets like this. I always try to tell them they do end, but people don't. They don't listen. They just leave. These are they're tiresome groups all over the place. Hey, we did a primer for investment club members in the semiconductor space today. Why? Because I want you to understand that they're not all created equal. For example, Micron's a commodity chip maker. It reported a good quarter, but said the next one will be light. So the stock broke down. It's now getting kicked to the curb. Same goes for Texas Instruments, which dropped nearly $5 today on talk that they can't make all the chips that they need. Or some people say weaker demand. I'm going with the chips they can't make all the chips. Best-of-breed semis like AMD, NVIDIA, Marvell Tech, they're in great shape. They got all the chips they need because they cost a lot of money. Their only problem is that they can't meet surging demand. That makes the semiconductor stocks very frustrating for most people. They're either terrible or terrific, depending on the one you pick. Or how about this? Right up the alley of the problem. Bloomberg's reporting that Apple has to slash its phone production, its iPhone production, because it can't get enough chips from Broadcom and Texas Instruments. Now, there's some real semantic issues at stake here. They aren't slashing production. They're slashing their goals because they can't meet demand. Oh, wow, are these two different things? We figure this will force Apple to cut its forecast, and that always causes stock to go down, always, okay? But is cutting your forecast because there's a component shortage the same as cutting your forecast because of a loss of demand? I bet Apple's prospective customers will just wait a little longer rather than switching to a competitor. There really isn't a competitor for the people who own Apple already. A machine, they love Apple. But the stock still got hit when the story came out, and I bet that won't be the last time it gets down on the same piece of news. What are we doing for the Charitable Trust? We're not selling. Why? Because trading in and out of Apple has been a time-honored way to lose money. Always a mistake. Classic dilemma of the moment. Should I stay? Should I go? If you're never enough, go. But as I always tell members of the club, it is almost impossible to tell when to get back in. And that's where the big money's made. And that's really my point. There's nowhere to turn right now. Every day someone tries to make sense of the broader strokes, the big moves, the stagflation calls, the Fed has to move calls. They try to. It's almost impossible. I mean, how can Alphabet drop 49 points when it was pushed so hard by a major brokerage today? Why did the retailers rally if the economy is supposed to be weakening? These are random, themeless moves, people, that make you feel like a dope the moment you get involved. So what do? You wait. You wait until we get closer to the end of the month, when historically the market tends to bottom. Then you get ready to buy stocks gradually on the way down. Bottom line, it is tough to tell people to relax. That doesn't work, RELAX. I mean, you can't even do that if you're Aaron Rodgers. You just need to know that you're not alone. In fact, judging by the ugly hedge fund numbers that I've seen recently, anyone having trouble with this market is actually in the majority. So don't feel bad if the market makes you feel baffled. It's incredibly confusing out there right now. It is every time we only get to what I call the ennui bottom.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.